It's showtime. Let's get started. Good evening. I'm Trudy Murata, a volunteer community ambassador with AARP Virginia. Welcome to AARP Virginia's Social Security Workshop, and thank you for joining us tonight. This program is scheduled to run for about 80 minutes, but we might finish a bit early depending on how many questions you put in the Q&A box. AARP has created this workshop because we are committed to helping you understand the ins and outs of your Social Security benefit. This Social Security workshop will help you learn how to secure your benefits and better understand the importance of Social Security claiming decisions, as well as explore the future of Social Security. AARP wants you to have the answers so that when you are thinking about retirement, you are confident in making a decision that is right for you. In the follow-up email from today's session, we will include a link to download the slide presentation, watch the recording at your convenience, and a link to all of the websites that we'll share with you this evening. Now, before we begin tonight, we know that many of you may be worried about the future of Social Security. And AARP is hearing from thousands of older Americans who are confused and concerned about the future of Social Security. Social Security is your money. You earned it through a lifetime of hard work. And for 65 years, we have worked with every White House and every Congress on both sides of the aisle to improve the lives of older Americans, and AARP will continue to fight for you. We have your back. We continue to be fierce advocates for you with members of Congress and the administration, so rest assured, we will never stop fighting to protect the interests of Americans who are 50 plus. I am thrilled to be joined this evening by Pamela Sams. Like me, Pamela is also an AARP Virginia volunteer community ambassador, and we're very fortunate to have her on our team. Pamela is a chartered retirement planning counselor, and she's spent the last 20 years helping people to improve their personal and financial wealth through solid financial life planning. Pamela is a strong advocate for financial literacy, and she voluntarily conducts financial education seminars and workshops on behalf of AARP. While indeed Pam is a financial planning professional, her role here this evening is to provide general guidance, not specific advice or recommendations, but hopefully the information we cover and the resources we share will help you make informed decisions about your financial future. So enough for me. Let me turn the program over to Pamela Sams. Give her a warm welcome. And Pamela, I'm turning the platform over to you.
Awesome. Thank you very much, Trudy, for that wonderful introduction. And hello, everyone from across the country, from Virginia all the way, and I heard Idaho in there. So welcome once again. My name is Pamela Sams, and I am a community ambassador with AARP. And I look forward to facilitating tonight's conversation, understanding your Social Security payments, because that's what we're going to talk about today. So AARP, as Trudy had mentioned, we created this workshop because we are committed to helping you understand your Social Security payments. So in this session, we're going to cover a lot of ground. So we're going to talk about what Social Security is, number one, full, early, and delayed retirement payments, Social Security and work, because I get that question a lot, family payments, how to apply, resources, and of course, everybody has questions about the future of Social Security. Now, although I may not be able to answer your questions now, we will get those answered. AARP does have a tool called Your Questions Answered, where you can search for your answers for any Social Security questions or ask a question and receive a personal answer within a few days. So we'll talk more about that at the end of the presentation. Now, this is meant to be an interactive experience, so definitely share your questions with us through the Q&A. Since this is a public forum, we do please ask you to restrained from sharing any personal or identifying or any sensitive information in this presentation. As you remember, I am a financial advisor, but I'm not here to give specific advice regarding your own personal situation. Definitely consult your financial advisor for that. Now, before we begin, definitely some ground rules. Just want to share the floor with, give you an opportunity to talk and learn from each other throughout this presentation. So this is a judgment-free zone. Please silence your phones and mute yourselves unless you are speaking. Be present, for the next 80 minutes that we're going to be together, because it's some really good information. Of course, you will get the link that we will provide at the end, well, tomorrow after the end of the presentation, so you can go back. But try to, refrain from multitasking during this presentation. So, Social Security, the basics. Social Security was created in 1935 in the aftermath of 1929 stock market crash and the Great Depression. It is based on the concept of social insurance, which means that all workers contribute to a central fund managed by the government. Now, almost everyone contributes to Social Security Trust Fund. Now, Social Security tax or FICA. So on your pay stub, you'll probably see FICA, which stands for the Federal Insurance Contribution Act. It is a tax paid by employees and employers that fund Social Security and Medicare. So the tax rate for Social Security is 6.2% for the employer and 6.2% for the employee, for a total of 12.4%. And that goes to Social Security and Medicare. Now, to be eligible to collect retirement payments, a worker must have worked for at least 10 years or have earned 40 credits. You probably heard that before, and paid into Social Security through payroll or Social Security tax. Now, Social Security Trust Fund used to provide payments to individuals who are retired, disabled, or survivors of a deceased worker. Social Security was always intended to be a safety net to provide some income. It was never intended to be the sole source of income in retirement. Despite that, many recipients are using it for most or all of their income. So let's switch gears a little bit and talk a little bit about this poll that we have. So if you were using Social Security as your only source, how much do you think you would be getting enough to cover your basic expenses? So in this poll, just a few seconds, and we can see what people are saying about what you think the average Social Security payment is. Okay, we kind of got neck and neck and running, and it looks like 1304 is pulling out. And okay, I think we're slowed down a little bit there. So we have 54 participants, but 73 people. Okay, so it looked like we slowed down a little bit. So the majority looked like they said 1304. If you were ever in college or if you're ever in school and you had those little scantrons, you believe, and you fill in the bubble, everybody or the professor always used to say the answer is C. So I'm going to say tonight the answer is C. 1976 is the average Social Security payment. So thank you very much for participating. So for those people who pick C, definitely pat yourself on the back. Don't have any parting prizes for you, but just know and feel good that you got C was the answer. So that's the average payment for Social Security. It may differ, of course, based on your situation and how long you've been paying in and what your income levels are. But the average person receives about 1976 for that. Moving on. So let's talk a little bit about when to claim your retirement payments. That's what people want to know all the time, is when should I claim Social Security? So you could choose to receive your payments as early as 62. But for the monthly payment amount, it will be reduced probably as much as 30%. Now, this reduction is a permanent reduction. So this includes any survivor benefits as well to your family who may be eligible for that based on your record. So it is important to consider how this decision will impact anyone who might collect Social Security on your record. Now, you can also receive your full Social Security at your full retirement age. So if you ever pull your Social Security statement, you may see FRA because government loves acronyms. It stands for your full retirement age or your normal or full retirement age. So that may be somewhere between 66 and 67, depending on your birth year. And you get 100% of your payment if you claim at your full retirement age. Now, you could also delay payment or delay credits beyond your full retirement age or your FRA. Now, this increases your payment about 8% per year up to age 70. So it could pay to wait if you are going to get a larger benefit at age 70, because that is 8% from each year that you delay credits past your full retirement age. So let's take a look at, excuse me, what your full retirement age is. This is based on the year you were born. So exactly, your full retirement age is important because it is the age that you can receive your full payments. Now, your full retirement age is gradually increases up to 67 based on when you were born. So you can check the year you were born, and on the left column, and then on the right, you can match it up. So from 43 to 54, we know that was age 66, and then it goes 66 in 2 months, 4 months, 6 months, 8 months, and 10, all the way up to 67. So if you were born in 1960 or later, then your full retirement age is 67. Okay, so basically just match up the year and when you were born, and you can find out what your full retirement age is. Now let's take a look at how claiming age can affect your monthly payment amounts. So in this example, let's assume that this individual is at their full retirement age, which is age 66. We can see that right there in the middle in the gray. Their full payment is $1,900 a month. Now, if the person decided to take payments early at 62, we can kind of see where their payment is $1,425. But if they wait, on the far right of the screen, you see in the pink, the payment could go up as high as $2,508 if they wait and delayed credits, delayed receiving benefits in 70. So deciding when to claim is a personal decision that only you can make. You may want to consider such factors as, of course, your savings, expenses, on how to decision could impact your family. As I mentioned before, whenever you decide you're claiming, definitely think about your survivor benefits, because whatever that number is, your survivor would get that basically half of that number. Now, remember, the impact of claiming isn't just your own retirement payment. As I mentioned before, it does affect those who are claiming on your record. So definitely have a conversation with your significant other on when to claim, because it should be a family decision. So let's look at ways to estimate your Social Security payment. Now, your exact amount of your monthly payment is based on what you've earned during your lifetime. The Social Security Administration will look at their highest 35 years of earnings. So they're not going to go back way back when it's your first job. Mine was at age 16 at Six Flags over Mid-America in St. Louis. That's where I was born and raised. So they're not going to go back and look at all of that. They're going to look at my highest 35 years of earnings and then determine what my Social Security payment would be. Now, your estimate of your Social Security amount can be, you can be determined or find out in 4 different ways. They really encourage you to go and set up one online at My Social Security Account or myssa.gov. You can also use login.gov if you're a federal worker. This is a great resource, and you can use it as an estimate for various ages. You can also order your Social Security card there, a new one if you don't have it, or review your earnings record. You can go online to ssa.gov and print it. You can also print SSA 7004 and mail it to Social Security Administration. So you can also get a copy of your statement there. You can also call the Social Security Administration at the 800 number listed here, 800-772-1213. And of course, if you are over 60, they are still mailing the green and white statements. I guess they figure people over 60 can't, use a computer, so they're mailing out statements to those people. So regardless, you want to get a copy of your Social Security statement either through myssa.gov or fill out the form, or you can call a number. Now, if you are within, I would probably say 5 years, this is the only advice I'm going to give you tonight. I'm going to answer questions later, but If you are within a 5-year period of retirement, you definitely want to pull your statement to start looking at what your earnings record is, because there could be some inaccuracies there. So, it could have, years that you had worked that could would amount to zero. And those years that amount to zero will lower your monthly benefit amount. So if there are discrepancies in your earnings record, you want to contact the Social Security Administration right away to make sure you correct those, because that's how your benefit is calculated. So you want to make sure that it's accurate as possible. So the cost of living adjustment and wage cap. One thing to keep in mind is when you're estimating the amount you'll receive for Social Security is the cost of living adjustment, or COLA. Each year, the amount you receive Social Security will be adjusted for inflation. So in this year, 2025, the cost of living adjustment is 2.5%. That works out to about $50 a month and a raise on the average average Social Security benefit payment. Now, additionally, it's important to consider that currently there is a wage cap for earnings. In 2025, this means that the worker will only pay FICA tax up to 176,100 of their income. If you have more than one job, employers are required to withhold FICA taxes. So you'll have to request a refund of any taxes paid on income above that number on the wage gap while you file your taxes. So if you're over 176, 100, you'll probably start to see that cap out probably somewhere around September, and then you'll go, hey, my checks are a little bit higher. You didn't get a raise. Basically, they stopped taking out FICA. So that's where those extra payments come from at the end of your payment cycle. So collecting Social Security while working, okay, this is a question that people have and that I get a lot of time as an advisor. But before you claim your Social Security payments before your full retirement age, so this is not going to be for people who have reached full retirement age or beyond. Basically, cover up your ears for a minute, because I'm going to talk to people who think they want to take Social Security prior to their full retirement age and work, because this is where this pertains to you. So if you claim Social Security benefits before your full retirement age, you should know that claiming early and continuing to work, you're subject to what is called the Social Security earnings limit. Now, in this scenario, your payments will be reduced by $1 for every $2 that you earn above the earnings limit. Okay. Now, this increases the month prior to reaching your full retirement age, and then your payments are going to be reduced by $1 for every $3 that you earn above the limit. Now, note that the limits are adjusted with inflation yearly. So this year, Social Security earnings limit is $23,400 for people who have not reached their full retirement age. So if you looked at that chart and your full retirement age is 66 and 3 months and you haven't reached it yet, and you decide you want to claim early, just know if you decide to work, you can only allowed to make up to $23,400 before they start deducting from your Social Security benefits. Now, in the year that you reach full retirement age, you're allowed to make $62,160 during that year that you turn full retirement age. Now, however, if you do claim Social Security payments before your full retirement age and keep working, some of your payment reduction will be returned back to you in the form of higher monthly payments after you reach your full retirement age and start to claim. So don't think all is lost. They took away your money from the benefit and you're not going to get it back. Basically, they're keeping it in the coffers for you, and you get a higher benefit after you have reached your full retirement age. And once you reach your full retirement age, the earnings limit no longer applies, and basically you can work as much as you want and still receive your Social Security benefits. Okay. So who can collect on your record? Social Security family payments, basically you start receiving Social Security payments. Some of your members of your family could qualify to receive payments on your record. Now, with certain requirements, of course, there's children, there's ex-spouses, believe it or not. A lot of people are like, really, I can do that? Yep, you can. And I'll talk a little bit about that in a minute. Survivors can also receive Social Security payments on your record. So we're going to dive into each one of those groups, and you can kind of see how that works. So children's payments. So if a child of a retired, deceased, or disabled worker case, in many cases, can collect Social Security payments on a parent's earnings record. Social Security incorporates children into its payment structure to help retirees with younger children for their families and as a form of insurance when a parent dies or can't work because of a disability. Now, within the family, each child will qualify or receive a monthly payment up to half of the full retirement age payment that the parent would have received. So that's basically half each child. So if you have 4 children, basically each child will get half of the FRA of the parent who is deceased or disabled. So to be eligible, your child must meet certain criteria or qualifications, of course. So for children to receive payments, they must be unmarried, age or under age 18, 18 to 19-year-old, and a full-time student, but no higher than grade 12, or 18 or older and disabled from a disability that they started before age 22. Now, however, there are limits, of course, to Social Security payments within a family structure or family members. So children and other. Depending on the payment amount and the number of family members who do qualify for under that record, the total will vary, but generally it's a total amount for family can be received is usually about 150% to 180% of a full retirement age payment. So they're going to basically take a look at that. If there's basically a spouse and then there's 4 children or 5 children and then they meet the criteria, they're basically going to cap it at 150 to 180% of that payment. Okay, so that's children. Spousal payments. If you don't have enough Social Security credits to get payments on your own work record or your own retirement benefit is a small one, you may be able to receive payments on it as a spouse on your spouse's record. Now, it is important to note that both of you or your spouse is eligible for Social Security payments on your own record. Social Security will pay whatever is higher, but not both. So if you ever call the Social Security Administration or you start to apply for benefits and you are in these certain categories, your own record, maybe a spousal payment, maybe a survivor payment, child payment, whatever you fall into, Social Security will always give you the higher benefit that you are allowed. Okay, so eligible spouses can generally receive 50% of a eligible worker's full retirement age amount. I'm sorry, full retirement age payment amount. I know there's a tongue twister there. Now, even if the working spouse collects early, the spousal payment will still be a portion of the worker's for retirement payment. If you are still married, you can only file for a spousal payment once the working spouse has filed for their own payment. It used to be something different, but they changed it. In order for a spousal payment, the spouse does have to activate or start collecting their payment as well. Now, you must be married for at least 1 year, age 62 or older. You can also claim at any age if you're caring for a child under 16 or a child with a disability who is entitled to payments on your spouse's record. So those are the criteria for spousal payments. Okay. Moving on to ex-spouses payments. So ex-spouses can also receive payments on their former spouse's record. This is a whole nother pool of money that Social Security Administration has. This has nothing to do with your ex-spouse's benefit amount. It doesn't negate or reduces theirs at all. So if you were married for at least 10 years, ex-spouse may file at any time, beginning at age 62, and do not need to notify the ex-spouse in order to file for this ex-spouse payment benefit. Now, eligibility for ex-spouses are generally receive 50% of the eligible workers for retirement age payment amount. Now, if the former spouse collects early, of course, the ex-spouse's payments will still be a portion of the former spouse's full retirement age payment. Ex-spousal payments do not affect, as I mentioned before, your ex-spouse's payment amount, nor the payment amount of their new spouse should they be remarried. Now, in order to receive it, though, there's some eligibility that you do have to have in order to receive on your ex-spouse's record. Ex-spouse receives his or her own payment, at least age 62. You have not remarried, so you can't be remarried during this time. And you can only collect higher payment amounts, but not both. So that again, they will look at what's the higher of the two, your own record or 50% of a spousal or ex-spouse, I'm sorry, of an ex-spousal's full retirement age payment. It is important to note that if both you and your ex-spouse are eligible for Social Security payments on your own record, again, they will pay you the higher of the two. But if you were fairly equal in standing in terms of what you were receiving and as income, more than likely you will probably want to claim on your own record because the 50% may be lower than what your own record would be. So let's talk a little bit about survivor payments. In the event of a spouse's death, a survivor can collect up to 100% of the payment the deceased would have start receiving or received in the future. So this includes any delayed retirement credits the deceased would have earned. However, it is also includes any reductions. As I mentioned before, if you claim early, the survivor benefit will also be a reduction as well if your spouse claimed early. Survivor payments can be claimed as early as age 60, 50 if you're disabled, but they will be reduced. They can also be claimed at any age if the survivor is caring for an entitled child. And we kind of mentioned what that was before when we were talking about children's payments. Dependent parents are also able to collect on a ex-spouse, I'm sorry, on a record if the deceased parents could show that the child was basically paying for at least half of their support. So if you have aging parents and they were depending on you, they can also receive survivor payments on your record. Ex-spouses can also be eligible if the former spouse is at least 60, 50 to 59 if disabled. They're married for at least 10 years and have not remarried unless they remarry after 60. Survivor payments are only reduced based on what the survivor payment itself is claimed. So in many situations, the surviving spouse can continue to collect on their own record, allow the survivor payment to grow, and then reach their full retirement age and then make a switch. So you can do that as well. The survivor is still subject to earnings limit if they have not reached full retirement age and continue to work. So if you receive survivor payments, you still will be under the earnings limit if you have not reached your full retirement age. So be aware of that. So remarry and survivor payments. So let's talk a little bit about how remarrying affects your survivor payments. If you remarry before age 60, 50 if disabled, then you can't receive survivor payments while you are married. If you remarry after age 60, 50 if you're disabled, then you can continue to qualify for payments on your deceased spouse's record. Okay, so if you are under 60, consider when you want to get remarried. Okay, if you're going to receive survivor benefit, I know it's one of those lifestyle choices you got to make, but if you still want to receive Social Security benefits, wait until after 60 to continue your survivor payments. However, if your current or new spouse is a Social Security beneficiary, you may want to apply for spouse's payments on his or her record. So you have your survivor payment, but you also have your new spouse. You can also take a look at what the spouse's payments could be as well. If that amount is more than a widow or widower's payment, you will receive a combination of payments that equal to the higher amount. So this is the only time they kind of do a combo for you if you have a survivor payment, but you also have your new spouse who is a Social Security beneficiary. Again, Social Security will look at those and do a combination and give you the higher of those, equal to the higher amount. Okay. So let's talk a little bit about how you apply for Social Security. There are several ways that you can apply for Social Security. With any of these options, you can apply up to 4 months prior of when you want to start your payments. So count the months right now. Here we're in March, and you want to start receiving payments, basically count on when you want to receive it. So April, May, June, July. If you want your first Social Security check, you need to apply now because July 1st will probably be the first time you receive a Social Security check. You can apply online by creating or logging into, we talked about my Social Security account or login.gov if you're a federal worker. Using several things, of course, reviewing your own earnings record, which I highly recommend if you're within that window of retiring to start looking at that earnings record. You can get an estimate of what your payments at various ages. So they usually have like a little slide rule you could put or plug and play. I want to, I'm 67, so I want to retire here at 70 or delay. I want to receive it at 62, 64. You can do the sliding scale and it can estimate what your payments will be. You can also estimate disability payments and more. Now, what's eligible to apply, you can do so via the website at myssa.gov again, or login.gov. You can also call the Social Security Administration at the 800 number. And you can also visit a field office. ssa.gov/locator will tell you where they are. Just one note, a lot of times the Social Security offices are crowded. So if you can, try to make an appointment if they accept appointments. It's a field office not too far from where my office is, and I was passing by to go to my office, and it was a line down the street, and I thought it was a new popular restaurant. No, it was the Social Security Administration office. So just know, stand in line for a little bit or try to make an appointment if you wanted to go to a field office. So let's talk a little bit about some of the changes in Social Security. We know we've heard a lot of what's going on, but this year, 2025, there was a Social Security Fairness Act that was put into place. This repealed two provisions, the windfall elimination provision, which is WEP. A lot of this pertains to government workers, and the government pension offset, GPO. These provisions previously reduced Social Security payments for individuals who were receiving pensions from their jobs and not covered by Social Security, such as teachers, firefighters, police officers, government workers, and the like. Now, this new law impacts approximately 3 million current retirees, their spouses, ex-spouses, surviving spouses. It is who have worked in public service jobs and received a pension. You're likely to be affected by the change. So they are doing right now what they call a clawback on people who may have been affected with that. So if you are falling into that category, look out for further information. It is retroactive back to January 1 of 2024. So if you're eligible recipients will receive, like I said, clawback or back payments for 2024, and their Social Security payments will be adjusted to include any increased payments moving forward for that. The Social Security Administration and Congress are still in the process, of course, of determining how to finalize the payment increase. So for right now, if you believe you are eligible to receive this increased payment, you should do the following. You want to update your information, ensure that your mailing address and direct deposit information with the Social Security Administration is up to date. You want to set up the account at myssa.gov or login.gov. If you already have my SSA account, monitor for updates on the Social Security Administration about when they would be able to enact those increased payments for that. So securing Social Security for the future, Trudy went a lot into that in the intro. So, Congress has several options, of course, to address the program's long-term fiscal challenges. So for example, here are 5 solutions to make sure that Social Security can pay up to 100% of your earned payments for everyone who is eligible for generations to come. So to learn more about the options, of course, you can visit the website organizations on the screen. There's a free interactive educational websites listed on the worksheet that you will be provided in the email. It'll be You've earned it options for making Social Security secure for the future that accompanies this presentation that you will receive. You can also attend any upcoming workshop entitled Social Security, You've Earned It. And you can also complete the online learning modules that are on the AARP website for important topics and saving to protect Social Security with that. So we have also discussed how to get your questions answered. If we don't answer them tonight, again, I'm going to open up the line in a minute for questions. But as Trudy had mentioned before, this is not a forum for any personal situation. So if you have particular personal questions, you want to go to the AARP, your questions answered tool. in order to get specific information on your situation. So this tool called Your Questions Answered can either search for answers your questions, or you can ask a question on your own. You will receive a personal answer within a few days. With that, to search for answers, select Social Security from the drop-down box at the top of the page. You can either scroll through the FAQ, the frequently asked Social Security questions, to find the answer that may match yours. And of course, you can also enter your own question in the dialog box. You do not have to be a current AARP login to utilize the tool, and you will need to be logged into the website, of course, to submit questions. But you can submit unique questions you will need to receive from a Social Security expert. Like I said, usually a 2 to 3 day window to receive that back. You can find the Your Questions Answer tool at aarp.org/Social Security. And basically, that's where you can get all of your questions answered there. So with that, I think we're at the Q&A. I know that was like drinking out of the fire hose on Social Security. He's like, what's going on?
Okay.
But we do have some time for Q&A, and this is usually the most fun part of the presentation, because I get a chance to see what comes out of our presentation and what people got from it with that.
Right.
So
And Pamela, I'm
you're
gonna
be
go
helping
with
me with that.
the first question tonight. I also have another AARP volunteer community ambassador helping me with the
Yes.
questions, and that would be Deb Cohen. So I'm gonna start with the first question that some of them just came up in the chat. Easier for us to find them in Q&A,
Yeah.
but I can answer the first one real quick.
Mhm.
What is considered earnings? Is it just wages?
For your Social Security benefits, is your wages. So they're not counting income that you've earned on, pensions and things like that. So your Social Security earnings are basically only the earned income is what they're counting for your earnings.
Okay, and Deb, I'm going to sneak one more in and then I'll pass it over to you from the Q&A box. Can the retirement age be increased retroactively? Can they increase retirement age retroactively? Interesting question.
Yeah, very interesting question. In terms of probably anything can happen, but they could increase and say, okay, 70 is generally where the latest that you can claim Social Security benefits. They can, of course, increase if they would like. That does have to be an act of Congress in order to do so. But it's a possibility.
Okay.
But usually it's, age 70 is the latest you can claim Social Security benefits. They can basically go beyond that if they would like. Now, for retirement age right now, they could move the needle, I guess. Your full retirement age is anywhere between 66 and 67 right now, but they could move the needle. So you always want to make sure you take a look at any updates that come out regarding Social Security. Bookmark it on website or news channels or whatever, but definitely have your ears open on any changes that could occur.
Okay, thank you, Pamela. Deb, can you do the next question for us?
I sure can. Thanks, Trudy. This is a pretty straightforward one for you, Pam.
Mhm.
Is Social Security reduced if you get a pension from a private employer?
No. So that was part of the windfall that we had just mentioned. They did repeal that one. Before it was integrated between pension and then could reduce your Social Security benefits, but not now. So if you were part of what they call the windfall elimination provision, was part of the pension and Social Security integration. So not now. So you won't have any reduction there.
Pamela, if they want to apply for Social Security benefits online, what
Mhm.
is the correct website to use to apply online?
Yes. So it's ssa.gov, ssa.gov. I believe it once you get there, it'll probably have login.gov, because I've signed up years ago for myself and it kind of takes you to login.gov. But if you type in ssa.gov, it'll take you there. And then you basically username, password, and then you're able to access your statements and apply for benefits as well.
Very good.
Pam, throughout the presentation, there have been a number of questions about divorce, and you've addressed a lot of those things. But in particular, there seem to be a few questions around whether or not you can collect on your spouse's Social Security, but still work yourself.
Yes. So let's go back to divorce, ex-spouse.
And I suspect that's true whether it's divorce or not divorce. It's a
Yes. So with the ex-spouse's payment, you basically receive 50% of your ex-spouse's full retirement age. You do have to be at least 62. If you are working, you could be subject to the earning limit if the ex-spouse if you receive it before your full retirement age. Basically, you're going to receive 50% of that, but it could affect if you decide you want to work as well. You would still be subject to the earnings limit. If that answers the question.
I think it does.
Okay.
We have one guest in the audience that full retirement age is in April of this year, next month. Can they
Yay.
apply in advance?
Yes, they can apply in advance. So you're within that range. That's why I said, the 4 months prior to, well, you're in the year that you're your full retirement age, you can apply for benefits. Just know that your first check is not going to show up until 4 months, from when you apply. So you can go ahead and start the process now for your full retirement age because you're within that window. And then, from April, basically count 4 months, and then that's when you will receive your first check.
So if someone has applied for Social Security and then decides, gosh, I think I've made a mistake and I want to wait, can they in fact ask it to be stopped and pay back any money that they may have gotten and wait another 12 months to start?
Yes. So it's called, Social Security only gives you like a one-time reset, the reset button. So you decide you want to apply for benefits and then you go, oops, I really don't want to do that right now. You can go ahead and pause it, but you do have to pay back what you received. It is only within that 12-month period. After that, basically all bets are off and you can't reset after that. So you want to do it within that first year of applying, and then you change your mind for that one-time reset, but make sure that you have enough to pay back what you took in payments.
So let's go over this one more time.
Okay. Yes.
If I'm over 62 and my husband is older, collecting Social Security, can I get spouse benefit of 50% of his if I'm not collecting Social Security on my own?
Okay. Reread the question so I can make sure I got all of the components.
I'm over 62.
Okay.
My older husband is collecting Social Security.
Correct. Yes.
Can I get a spousal benefit of 50% of his if I am not currently collecting Social Security?
And how old? Over 62? She's currently over 62?
She's over 62. Husband is older.
Yes.
He is collecting Social Security. She is not.
Yes. Then yes, she can go ahead and do the 50%. You are not at the full retirement age though, but you can receive the 50% of your spouse's FRA payment amount. If you decide at some point you were going to take 50% and then you can let your record grow and then you can collect on your own record if you think that's going to be higher down the road. But you're not going to collect both. You're basically 50% right now. And then on your half of your spouse's record based on his full retirement age.
Okay.
Your record will continue to grow. If you think it's going to be, your record is going to be more than that 50%, you can switch down the road.
Okay. And just a reminder to our folks in the audience, we are recording tonight's program, including the questions and answers. So if you need to re-listen to any part of Pamela's presentation or any part of the questions and answers, you will have that opportunity to do that in the comfort of your own home at your convenience.
Yes.
So
You're
there've been a
like, let me
couple of
listen to
questions.
that again. I know, because it's back and forth confusion on a lot of this. Yeah.
Correct.
So there've been a couple of questions now on taxes.
Mhm.
Can you opt not to have taxes taken out of your Social Security and then pay them later when you file your taxes?
You can. Um, just know that at some point, if it becomes a part where you end up owing, you may have to go back and say, hey, I need to have withhold for my Social Security. But you can do that. You don't have to have taxes taken out right away. My mom did that for several years and then oops, found out that she probably should have been withholding taxes for her Social Security because it was a couple of years that she ended up owing. So just know, yes, you can. But at some point it may catch up with you and you have to withhold at some point to go back and say, okay, maybe I should be withholding taxes out of my Social Security. So consult your tax advisor for that question as well. Social Security is taxed based on a portion of your Social Security be taxed based on what kind of income you have coming in. It's what they call a provisional income. So your pensions, your IRA money, things like that count. So monies from Roth don't count. Money from cash value life insurance, certain things like that do not count as that provisional income that could impact the taxability of your Social Security benefit. So definitely consult your tax accountant with that. But yes, you can just receive it and then pay the tax later.
Great. Pamela, do you have any hints or suggestions for filling out the SSA benefit application online? In particular, this guest has read about putting statements in the remarks field to deal with retroactive benefits and wanting or not wanting to receive them.
Mm-hmm.
Any?
Yeah, anything that you can provide. They ask a fair amount of questions on, especially with widows and widowers, of what their Social Security was, what their job, basically roughly what their income is. So anything that you can supply to them so they can calculate what your Social Security benefit would be best. If you do have, certain documents, you do want to perhaps go to a field office for that. I did have a client once that I think it was a name change or something, that they wanted originals of stuff. So you don't want to, provide or mail originals to things. You may want to go to a field office if you have those type of documents that are that they're requesting for it. But yeah, anything that you can provide for them to help calculate your benefit, the better.
Great, thank you.
This next question is a timing question.
Mm-hmm.
So let's say I retire in January and I apply for Social Security. Will my payments be reflective of my earnings from the previous year? In other words, has my income from the previous year caught up to the payment that I'm getting? And if not, would it be adjusted and my Social Security go up once my earnings from the previous year are calculated?
Yeah, that's definitely a timing issue. So yes, they're going to take that highest 35 years of earnings. So if you're at the beginning of the year and you haven't caught up yet, they will recalculate your payment based on that full year. So let's say, January of this year, they would not have had 2024 in yet, all of it. So at some point, you will end up getting an adjustment in your payment. Um, After you apply based on what they adjusted on what you earned last year. So yes, but still looking at that highest 35 years. So yeah, it's a little funny when you do it at the beginning of the year on that because it really hasn't caught up yet with your statement, doesn't have the full the full 2024, for example, on that, but just know they will make adjustments for your earnings.
Pam, this question came up in chat early
Mhm.
on in the presentation. And I'd never thought in terms of Social Security benefits and payments being anything other than monthly.
Mhm.
Are payments monthly, and are there any other ways that payments would not be monthly, I guess is what
Yeah.
I want to ask. Okay.
Exactly. As far as I know, they're monthly payments.
Okay.
Haven't seen anything about, except if you end up like this clawback thing that they're going to be doing, more than likely you will get lump sums at that point.
Okay.
But your actual benefit will be monthly.
Very good.
So this is a very practical question. When you're enrolling for Social Security benefits via the website, what information should I have handy to submit accurate information when I'm prompted by the system?
Hmm. So of course, your name, your social security number. For the most part, they will have your earnings record. That's how they will calculate what your benefit is going to be. That's why I was explaining a little bit earlier in the presentation to, before you apply, look at the validity and the accuracy of your record, because that's how they're determining what your benefit's going to be when you start applying for that. So if there's any discrepancies or inaccuracies in there, you want to catch those first before you apply. So download your or access your statement online, make sure everything is accurate, and then from there, it's basically walking you through the prompts with your name, address, social security number, what your earnings record is, if you are married, if you have been divorced, if you've been widowed. So they'll ask you all of those questions because they need to calculate which of those eligibility payments that you have access to, because you could be eligible for a spousal payment, your own record, being a widow, being an ex-spouse. And so they want to know all of that. So they're going to ask that through the different prompts that they will ask you as you're filling it out, so they can calculate the most accurate payment or benefit for you.
Is there ever a time when a spouse's earnings could count against your earnings for Social Security earning limits?
Your spouse earnings limit? No.
Spouse? Okay.
Yeah, everything is individual when it comes to your earnings limit on what you're earning to affect your benefit. Now, if you qualify for a spousal payment based on 50% of your spouse's record, then of course their earnings limit would count against theirs, which could affect yours. So it's kind of a trickle
Okay.
situation if you think you're going to be with that. But if you're earning on your own record, then there's no coinciding with your spouse's record.
Okay.
So on that point about earnings limits, can you talk a little bit about that and how earning limits are calculated, and how you know whether or not you're going to go over that if you have income from either a job or something else?
So earnings limit is, as I mentioned before, 23,400 for this year if you're under full retirement age. So that's why I was saying, people close up your ears if you're over full retirement age, because none of that applies to you. It's only if you decide you're going to continue to work and you have not reached your full retirement age. So they calculate it based on your basically a W-2 or 1099 or however you're paid. 23.4 is the limit that you are allowed to receive. Once you have hit that limit, then that's why when they start reducing that dollar for every $2 that you earn over that amount with that. So if you know you're going to have a job that is paying 40,000, just know anything above 23.4 is going to start to be reduced out of your benefit amount. You can definitely go ahead and receive that. Just know your benefit is going to, keep going down. So then you have to ask yourself, does it really pay to receive Social Security and work? Because if you keep deducting and deducting off of your Social Security benefit, your Social Security check is going to be smaller while you're continuing to work. So you have to kind of weigh the pros and cons of continuing to work and receiving benefits. Again, they're going to receive it back, or you're going to receive it back in the form of higher benefits later. But at the present time, does it make sense to continue to work and receive the benefits if it's going to be reduced, if you are not at your full retirement age yet?
With regard to the cost of living allowances,
Yes.
does that only apply to someone who is already receiving benefits, as in before 2025? Or can a cost of living adjustment occur to someone who is starting benefits in 2025?
So it's people who have been receiving benefits already for the cost of living adjustment for 2025. So each year it is adjusted with that. So it's usually people who are already receiving the benefits.
Got it. Thank you.
Mhm.
Can you apply for Medicare at age 65
Mhm.
and wait to collect your Social Security payments until later?
Correct. Yes, you can. Just know then you will be paying your Medicare separate, because a lot of times people, it's kind of weird. You can apply for Medicare through the Social Security Administration, and sometimes people have their their Medicare payment deducted from their Social Security payments. So if you wait to receive your Social Security payments and you are applying for Medicare, you would just basically be billed for Medicare versus having it deducted from your Social Security.
Okay.
Okay. The long one, Pamela, you ready?
I'm ready.
It is my understanding that to start Social Security payments, I specify the month for which I want to receive the payment. To receive increased payments after my birthday, do I request that payments start in my birth month or the month after?
To ensure you're going to get the higher month, you want to the higher amount, you want to do it the month after your birth date.
Okay.
Yeah. Yeah.
Okay. So if I delay my payments until age 70 so that I qualify for the maximum benefits,
Mhm.
after I die at whatever time that is, would my spouse receive the same maximum benefit amount as her survivor benefit?
Yes, but up to 100%. So depending on how old you are at the time, a portion could be not, it may not be the total 100%. So definitely take a look at that. You know, with your tax accountant, well, when you contact Social Security Administration. But for the most part, the higher benefit, that's why I was talking about before about the survivor benefits. If the spouse takes it a little bit earlier, that's what you're going to get. If you take it at full retirement age for your spouse, that's what you're going to get. And then if you get the max credit from that. So yes, you would get the full benefit amount. Up to 100%, because I have seen it being a little bit of reduction, but yes, in essence, you can.
Pamela, let's go back to yours and my favorite subject.
Uh-huh.
Falls under the category of all my exes live in Texas.
Oh, yeah. Yes.
Can I draw on my ex's Social Security now and then switch to my Social Security when I turn my full age without it affecting my amount? Can I draw on my ex's Social Security now and then switch to mine when I reach full age?
For retirement age. Yes, as long as you meet the criteria, you're at least 62, you've been married for at least 10 years, you can do that. So with the survivor benefit, no, I'm sorry, the spousal benefit and the ex-spouse's payments, you can basically do that switch down the road if you want to claim yours claim 50% of the ex-spouses and then wait till yours grow and then make the switch later.
And just to be clear, it doesn't matter whether your ex lives in Texas or not.
It doesn't matter if they live in Texas or not, you know. And if you have different exes, I mean, there could be several. Again, Social Security Administration will kind of run 2 or 3 of them, depending on who you think will pay the most money and pay the highest amount. Then they would, like I said,
Okay.
you're not going to ever get both, but you can definitely say, okay, maybe that spouse made more, maybe this one, and then you kind of go from there.
Okay.
So not all in Texas though, but.
So is the emailed estimate that the Social Security office sends annually the same or identical to the estimate that you can get yourself when you go on to the Social Security website and use their calculator? Is it the same?
Yes, it will be the same that you have there. But again, as I mentioned before, you have the kind of that plug and play. You can put your own number in there, and then also the sliding. So looking at different ages. So when you get your statement or your earnings statement, they're going to show basically 3, maybe 4, probably 4 numbers. So what is the benefit is going to be at 62 at earliest, what is going to be at your full retirement age, and what is going to be at your at delayed credits at 70, and then basically disability. So they'll give you those 4 numbers, but maybe you say, I want to look and see what it would be at 64 or 65 versus that. So that's where the calculators come in. But for the most part, with your statement, they will have those 4 numbers already, plugged in, and then you can kind of play around with the calculator a little bit to see what it would be at different ages if you decide to want to take it early, or let's say you don't go full retirement age. I'm sorry, full delayed credits at 70. Let's say my full retirement age is 67, but I want to do 68 or see, and then you can play around with the calculator and see what the benefits would be.
I thought we had addressed this, but it has come back up, so I'm thinking
Okay.
maybe we didn't address it
Okay.
correctly. Does reduced payments prior to full retirement age apply to earnings from employment only, or does it apply to pensions, 1099 investments, and so on?
Mm-hmm. The earnings limit is only on earned income.
Earned income.
Earned income, yes. Yeah. Mm-hmm.
So for a married couple, if they both wait until for the full retirement age, do they both receive full retirement Social Security amount?
I'm sorry, what was that question again?
So for a married couple, if they both wait until full retirement age Social Security, do they both receive full Social Security amount?
Yeah. Well, each of their records. So you just apply for your Social Security, your spouse applies for their Social Security, and basically, there you go. A whole pot of money in the household.
Okay. So another tax question.
Okay.
If you're not working and you're only receiving Social Security and a small pension from a deceased spouse, do you have to file and or pay taxes?
On your Social Security? Is that the question? I'm sorry.
Yeah, I imagine it's taxes on Social Security and on the pension. I guess it may be, is there an income amount under which you did not have to pay taxes?
Social Security and your pension, I mean, definitely, you want to consult your tax accountant on it. But everything goes on your tax return, and then, they can determine if you owe tax or not on that. But she means in terms of filing, actually have to file. I have to have a clarification on that question on
Yeah, I'm
filing
not sure.
or versus paying. Because filing, anything above, 12,500, generally you have to file at least. But paying taxes is a little different because your tax accountant would look at your pension, your Social Security benefits, and what you're receiving, and then a portion of that could be taxable. A portion of your Social Security be taxable.
Mhm. Okay. Yeah, I think the answer to the person's question is yes, then. You do
Oh,
have
okay.
to file and pay taxes. The question is how much? And if your earnings are lower, then you wouldn't have to pay a lot.
Yeah, exactly. But if it's over, like I said, the normal limit usually is about 12,000. Anything above that is you would have to file your taxes, and then you may be able to get a little bit of a refund if you had taxes withheld from your Social Security or your pension.
Okay.
Pamela, under
Mhm.
what circumstances might someone receive a lump sum payment? We've got an individual here that is aware of two people who applied for Social Security and were advised to backdate their application. They then received a lump sum payment. Are there any scenarios that you can think of off the top of your head that would end up in a lump sum payment situation?
Mm-hmm. Um, like what I was mentioning before, kind of with the windfall elimination provision, or something happened and it wasn't integrated correctly with your pension and it wasn't supposed to, you were supposed to receive a higher amount in your Social Security. Those, like I said, would be like this basically a clawback they're going to do from January of last year, do it with the GPO and the windfall elimination period. Those are basically going to be lump sum payments that people will receive back with that, and then adjust it with the higher payments. But that would be an instance where somebody would receive a lump sum payment from Social Security.
Okay. Along the
Mhm.
same lines, a similar question just came in. If there is a clawback situation,
Mhm.
how long do you have to pay the payments back?
Um, well, two different things. The clawback is basically they should have been paying you more and they didn't, so you don't have to pay that back.
Okay.
If you decide that you received benefits and you want to stop the receiving benefits, then that's where you would end up paying it back. It's generally within that 12-month period.
Do the 35 years have to be consecutive if you're looking at earnings? So this individual attended college and have had 32 years of earnings after college and several years before college. So it wasn't a consecutive 35 years.
Mhm. Yeah, no, it doesn't have to, because like I mentioned before, some years, like for examples, stay-at-home moms, and you could have been
Mhm.
out of workforce for a period of time, those would count as zeros on those years. But then it would basically do a combination of what those highest 35 years were, but they don't have to be consecutive. There could be some zeros in there. When you were not working, or you could have been in school or a stay-at-home parent, those wouldn't count, but they look at the combination of those. So with basically 40 quarters, they look at, kind of those earning years, and then they condense it with the highest 35 years of earnings.
How long after the day of your 70th birthday can you apply for Social Security benefits?
How soon? Is
Yes.
it? If you're within that year that you turn 70, basically you can go ahead and apply for benefits, because like I said, it's going to be at least 4 months before you receive your check with that. So if your birthday is this month, go ahead and apply for benefits, knowing that your first check will probably be somewhere in July.
If Medicare payments are taken out of Social Security benefits,
Mhm.
is that just the normal Medicare payment, or could it also include IRMA payments? And you might need to explain what IRMA is as
Mhm.
well.
It would probably include IRMA, because IRMA is part of your Part B premium. That's in what part of your Medicare with that. So IRMA, for those people who are online, basically, if you made over a certain amount um, of income, your Part B premium could be increased over let's say, the standard amount, and that's where uh, IRMA comes in. It's basically income related to modified adjusted income is basically, it's probably the A is standing for anything, but nonetheless, it's basically, hey, you made a lot of money. Your Part B premium is more than the standard amount for Part B premium. Now we're gonna adjust it up a little bit. So whatever you are having deducted from your Social Security, generally your Part B premium, and or if you have Advantage, which is your Medicare Advantage, then you can have your premiums taken out of Social Security as well. But yes, it would include IRMAA in any deductions that you have taken from Social Security.
If you are not working and only receiving Social Security benefits and a small pension from a deceased husband, do you have to file and continue to pay taxes?
Was that the same question? I wasn't sure. I
Oh,
think
It
we
is.
had that question.
Did
We
I
did have
repeat
that
that one? Okay,
Yeah, I think we
Sorry.
had that one. Okay.
okay. How about this one? If I
Okay.
withdraw money from a 401k, does that count against my earnings limit?
That does not. So any working earned income is what they're talking about for the earnings limit. So if you receive your 401k or money from IRAs or things like that, that does not count with the earnings limit. It's just basically if you're continuing to work. Earned income.
Okay. Great. Deb, do you see anything that I have missed at this point?
No, I don't think so. I was just looking at my notes. The only question I think maybe we might go over is what are the considerations for when to decide when to apply? So I know that we've talked about how much the earnings are and what your other financial obligations are, but are there any other tips for someone when thinking about when should I apply?
Mm-hmm. Again, I mean, I guess if you're in when to apply, like I said, it's definitely a personal decision, but just knowing, where if you're under your full retirement age, how that would impact not only your benefit and the reduction, but also your survivor benefits, your full retirement age, or if you're gonna, let's say, if you're gonna work, of course, you have to consider what the impact is going to be on the reduction of your Social Security benefits, your full retirement age, and or full delayed credits. So again, that is a personal decision on actually when to apply for benefits, and that's based on kind of your personal situation of what you have coming into your household. Do you have investment accounts? Do you have 401ks, pensions, IRAs of the such? And then how does Social Security fit into that equation for that? If you do need income earlier, if you decide you're going to retire a little bit earlier, and you don't have a whole lot of other resources to tap into, then maybe applying for Social Security benefits early would be your out. I mean, not out, but basically the way to have income into your household. So again, that is a personal decision on when to apply. So really looking at what your household dynamics are and what other sources of income you have for retirement is kind of some tips on when you think you want to apply for benefits.
Very good. Pamela, thank you. I think we've reached the end of our session at this point. So on behalf of AARP Virginia, I'd like to thank everyone for joining us and express all of our gratitude to Pamela Sams for sharing her valuable time and expertise with us this evening. We would love to get your feedback on our program. In the chat box, you will see a link to a survey. If you have just a minute, please click on that link and share your information with us. We will also send this link in a follow-up email. If you enjoyed tonight's program and want to join us again, we will be offering this again in May. And you can look at our program and all of our upcoming events by visiting aarp.org/local. And just a reminder, in a follow-up email, you will be receiving a recording of tonight's program and a link to all the resources that we shared. So until next time, Pamela, thank you. Deb, thanks for your assist with the questions as well. and have a great evening. I hope you found this very helpful, and we will see you again soon, I hope. Thank you.